Evening, everyone. We're here for another half an hour today, so starting at 7 o'clock, go to about 7:30, and I will try to answer as many of your money questions as I can. As ever, a few things just sort of to help this run smoothly. When you're asking your question, you're typing it, please try and type it really clearly, so when I read it, I get it straight away. So just spell check it, make sure you've not missed any words out. That will help a huge amount. And also, please do try and ask just one question, at least in the first sort of 20 minutes or so I can get through as many people as possible. We always do run out of time, so if you're right at the end, don't always get around to them. But remember, you can head over to the community on Facebook. The short URL is becleverwithyourcash.com/community. It's up there at the top of the screen if you're watching on YouTube. That's a great place to ask your questions. And remember, a lot of the time, the questions you'll ask, I'll probably redirect you to the YouTube channel or to the website because I've probably covered the content already in more detail. The website obviously is becleverwithyourcash.com and the YouTube is Andy Clever Cash. So there might be, if we don't get through to it today or I redirect you, that's where you'll be able to find the options, and you can search within both those. There's a search button in both the YouTube channel and on the website to help you find things. So let's get started we've already got some questions that have come through over on YouTube. So Diego says, I've received some of my earnings in euros. How can I convert them fee-free to pounds? Revolut has a free allowance of £1,000, but I need more. And unlimited with paid plans. Are there better options? So what I've done before when I've received income, sometimes in dollars, I've used a account called Wise. It used to be TransferWise, now called Wise. And you'll get the money that comes through and then you will pay a fee to exchange it into sterling. But it was, at least at the time of researching it, one of the best options out there. There were a number of different ones that would give you this potential to do this, but that was definitely a good one for dollars. Now, Starling Bank does have a euro account and a dollar account, and the dollar account worked out quite expensive in terms of it was decent, but Wise was better. I never really looked into the euro option, so it's definitely worth taking a look at them, seeing what they charge. B says, hi Andy, what is the prize savings account for Chip? Also, on my account, it says your membership, 25 days left. What does that mean? So this is the second bit, first of all. What does it say, your membership, 25 days left? So with Chip, there are two membership options. There's the basic one. I can't remember what it's called right now. Chip. It used to be called Chip Lite. It might just be called Chip now. And that's free, and it won't cost you anything at all. But it still is a kind of monthly rolling basis. So you sign up, and it will keep going month after month. It'll just say your month's coming to the end. And that's because the other option, Chip X, that is paid for, that you have a monthly fee. So they've just set it up so there's always memberships, a free membership or a paid membership. Personally, for most people, I don't think you need the paid membership. It's more about investing. You do get the auto saves for free, but you can get those via a similar app called Plum. So again, I wouldn't worry about that too much. Now, the prize savings account, I have got content on that on the website and on the YouTube channel. So go and check that out. But effectively, it's one where you leave your money in this prize account with Chip, and based on how much you've got in there, and it's an average amount over the entire month, you'll be entered into the chance to win a prize. You might win, you might not. Personally, I think your money's better off in a higher paying savings account and guaranteeing you're going to get some cash. There's no kind of equivalent rate that they provide for you to get a kind of even a way of trying to compare it, what you're getting compared to a different account. Tracy Mobile says, there's talk of mortgage offers being withdrawn. How will this impact people who have accepted offers in the first place, e.g. remortgages? So that will vary by provider. Some of them will kind of, well, they've given you an offer and they'll stick with it until you need to use it. Others, they may well withdraw it. There's no guarantee. So I would just double check. If you already have an offer in place, find out what those terms are. And if you haven't done it yet and you're worried about it, particularly with everything that's going on right now, it's probably not a bad bet talking to a mortgage advisor or a mortgage broker to get a sense of what they think the best options are for you in the market. Again, they may have some where they're like, yes, if you go for this one, they won't renege on it. But if you go for this one, there's a good chance you may miss out. So it's important to kind of look at that. Now let's just jump to over on Insta. Let me scroll through you guys. It just whizzed through us. I know I say the same thing every week, but it does do that. So James says, hi Andy, I've applied for 2 current accounts and an overdraft in the past 2 months. I'd like to get an Avios Plus card in the near future. How long should I wait for applying? So it really depends about you individually, because there's no reason why someone couldn't open multiple current accounts and credit cards in the same day, same week, same month. But obviously, the more applications you do, the more hard searches there are going to be on your credit check, and therefore the more these will appear for future lenders to see a number of these. And sometimes a concentrated amount of applications in a short space of time can look like desperation. They don't necessarily know what you've applied for and what's successful. Yes, they could maybe work out some things because this account opened here after that search and stuff, but they don't know for certain. So that can sometimes be a bit of a trigger, a bit of a warning saying, don't go for these people. They're obviously applying for loads of things at the same time. That might suggest they're in trouble, but it might not. And as long as if you have a healthy credit score, which that for suggests the score is not as important than the report underneath. I have sort of spoken about this a lot on other videos and other content. If you look, if that all looks good and your credit report itself is pretty healthy and you don't have anything important on the horizon, you haven't got to remortgage, you don't need a balance transfer credit card or other things that could be you don't want to risk getting rejected for, then maybe go for more stuff now. That's the theory, at least. Experian, when I had them on the podcast, when was it? Oh, got a while ago now, but they kind of suggested that you should space out applications every 3 months. That kind of gives enough time for things to look like a gradual sort of progression. So anywhere between that, waiting 3 months between applications and just going for it. Well, important to remember that with credit cards as well is always do an eligibility search first of all. And again, there's a whole video actually and an article looking at credit card rules, and I go into more detail on that there. So do check that one out. Right, so let's do Alexia. Hello. Hi, Andy. Using my credit card far less since Chase. I noticed on my Experian report that they seem to look at this unfavorably. Would it be better off to stop using my credit card altogether? So this will come down to credit utilization. So they will see, because you aren't using your credit card, they will see that there is a huge amount of, well, depending on what the credit limit is, but a large amount of credit unused, potentially to be able to use. And the weird thing is they don't like having too much available. They don't like you having near to the limit. They like a little bit in between. But again, this is only an issue if you are due to have any kind of applications coming on anytime soon that are really important. If your credit score and therefore your report underneath it are still looking quite healthy, don't worry about it. It's nothing to beat yourself up about. Of course, there could be some situations where you're like, no, I have got some stuff going along, and therefore maybe you want to favour your credit card and obviously paying it off in full, as I'm sure you do because you're watching it or here most weeks, to make sure you don't get charged interest, maybe in favour of Chase or splitting things out a little bit. Mayhor says, hi Andy, my friend's credit score is too low. How do they improve the credit score? Again, a whole content video and article taking you through some simple things you can do and some other things you can do to help improve your credit report. So do take a look at that, and that will hopefully give you some suggestions there. Gody100 says, a random one, but why don't you talk about gambling offers? Okay, I don't talk about matched betting, which is I think what we're talking about here, because although lots of people will say this, and people who are making a fair bit of money from this by recommending it to people, but they will say that if you do it right, do it the maths, then you aren't going to lose money. And I think that is probably the case in lots of ways, the ways to hack it and stuff. However, the gambling companies aren't doing this out of the goodness of their own heart. They're not going, oh, wouldn't it be nice if we do this little thing that some people could take advantage of and we can make loads of money, and they will make loads of money and we'll lose out, but it's nice. They're doing it because they know a large proportion of people who get into gambling via matched betting will then carry on gambling without the matches, and then they'll lose money, and that potentially could push them into problem gambling and problem debt. So I blankly do not encourage anyone to do matched betting, full stop. Yes, if you want to do it and you feel comfortable doing it, there are resources out there which will help you, but it's not something that I will encourage. But I know a lot of people do it. Elle says, hi Andy, how do you keep track of spending and what cards you have? Do you use a budgeting app? So one of the big reasons why I've not used budgeting apps for the last couple of years is because they didn't have Chase, and some of them didn't have American Express either. And they are primarily the two ways I do most of my spending. Chase, as I detailed in my bank account update video from the other week and article on the blog as well, has just recently joined open banking. That means that it will start to appear, excuse me, it will start to appear on more apps. It's already on MoneyHab. And now it should be, although this isn't a budgeting app, this is a cashback app, it should also be on Cheddar. So it will hopefully come to Snoop and Emma and all those ones as well at some point. And Amex, it's on Money Dashboard, Money Hub, but is it not necessarily on the others? So that's why I don't use them. Instead, I have a spreadsheet. It's a very simple spreadsheet. It's no point sharing it with you guys. It's a list of accounts. It's a date. And what I do is once a month, I go in and I just go through and check all the balances, add them all up, total them up, check there is enough in there. Should be fine. I've automated most things. So for example, I've got the Halifax No, so the Club Lloyd's current account. I need £2,000 to go in there every single month. Don't need anything else, but that means I get the void the fee every single month. So that just needs to be ensured that £2,000 is going to go out. It will. I've got standing orders in place. It's absolutely fine. Whereas the Halifax Reward one, I do have to go in there to manually process those payments. So I'm going there more often. But broadly speaking, I'm just going in once a month and checking everything's okay, that I'm not going to be overdrawn. But I also have notifications and push messages set up on those banks as well. So if I do go below a certain amount of money or go overdrawn, it will let me know. So a good example of this was I had, I can't remember what happened. It must have been because of the bank holiday. So a payment didn't come through on the day because the bank holiday. It should have come through, given it enough time before the money had to go out. So I got a notification from that bank saying, you're overdrawn. So I quickly went in, transferred some more money across. And then actually the next day, the money, the standing order was already set up, came through. I mean, I had to go in and manually take that out because it's a little bit extra, but that's generally how I do things. If you don't use Chase or Amex, though, absolutely have a look at some of those budgeting apps. Samuel says, hi, Andy, I hope you're well. I have an HSBC credit card that I haven't used in around 18 months. I want to start using it again, so order a replacement card, but it never turned up. So I ordered a second card, and that hasn't turned up. Any advice on what to do? So I would phone them or go into the branch and see what's going on there, because there obviously is a risk that you've got an old address of yours and they're sending it to an old address, or maybe it's been intercepted in the post, whatever it might be, and that obviously can be a problem for fraud. Hopefully it's not that. Hopefully there's something simple and they just get it sorted. But yeah, have a look at it. Now, sometimes when cards do expire, then you can't do them via the app or online banking. You do have to order them either in the branch or on the phone. It does vary by bank and the type of card, but certainly I would get in touch with them and find out if they can say what's happened. Have they actually been sent out to you, these cards? I would say, though, that it depends on the cards, but if you want to use a credit card, there are better ones than the HSBC one in terms of benefits. So you might want to consider, if your credit score is strong enough and there's nothing seriously important coming along on the way, do an eligibility search on a comparison site, seeing what options are out there for you, see if there are better ones in terms of earning money or other kind of benefits that might come from that. Dylan says, have you thought about doing a review on Crew? Been using it for a month and it's been really easy, and I like the interest rate for keeping funds. Yeah, Crew is on the list. It's been on the list for a long time. It was, to be fair, it was higher up the list of priorities when it was offering market leading rate on savings. Now it offers a decent rate, but not market leading. So it's difficult, I think, to recommend anyone to use it for savings when you can get more elsewhere. And also as a current account, it's nice. It's got some simple things in there, but again, there are better options out there. So it became deprioritized, but it will. There will be content on it at some point, I promise you. Same with a number of things I've done in detail before, so I will get those through you to you. But broadly speaking, I think it's quite good on the basic amount that I've used it, but there are better options out there. Adam says, I'm looking at borrowing £13,000 for a new car. Obviously, a loan is best than car finance, but are there any other better options you could suggest? Well, you say a loan is best than car finance. It does depend. Really, you're looking at a few things here, aren't you? You're looking at the interest rate. How much is it going to cost you? You're also looking at the term of the borrowing. How long have you got to pay that back? It could be the loan isn't for as long as you would like it to be, and the car finance is better, or potentially could be vice versa. And you also want to look about any kind of conditions that might come as part of that. There may well be penalties if you want to overpay it early, things like that. So again, I wouldn't necessarily rule out car finance. Sometimes they may well even have some special deals. If you take the car with finance, they might even be able to give you a discount. It all depends about quotas and times of the month and the salesman's, what's going on, all that kind of stuff. But it's definitely worth seeing what's there. But before you go in, be armed by knowing what else is available from a loan. You could look at, and you won't get 13k on it, but maybe some of the money, you could look at a 0% money transfer credit card. Again, I've got a whole article looking at those. I don't think I've got a video on them. I might do. Have a look. You'll find out. I think it's just an article on the blog. But these are cards, a bit like a balance transfer credit card, but rather than transferring the amount from a card to a card, you're transferring it to your current account. And that is money for you to spend as you wish, which means it's quite a good way to clear overdraft debts, or quite a good way to clear catalogue debts, because they aren't cards, so you can't use a balance transfer. However, there aren't many of them, and there is a transfer fee on them as well, so it's not going to be free spending. But certainly, it's worth considering that as an option. Yeah, have a look at that. Do that. So hopefully, you'll be able to find something from those different options there. There are also, with loans, you can often do an eligibility search on those as well. So you should get a sense of how likely it is to be accepted if you are, what that rate might be. Because again, remember, these can vary. The advertised rate isn't necessarily the one that you will get. Mark says, What's the best savings account to put about 15k into? I can't do ISAs as I've met this year's allowance. So as I say, with any savings account, every single day, at least once, probably twice, sometimes 3 times, 4 times a day, I am updating becleverwithyourcash.com/savings. This is my big long list of the best regular savers, current accounts, easy access, limited access, notice account, and fixes and ISAs as well, with all the best ones out there. So you can go there at any point and see what the best paying rate is. Now, obviously, sometimes the highest paying one isn't going to be the best one for you. It could be online only, or there could be other restrictions, whatever it might be. But have a look there. You will find the best ones. There is, right now, in terms of if you want a 1-year fix today at 5.7%, which is Ali United via Raisin, which is a big jump up from the next one, which is about 5.54, I want to say it was. Again, there was a Bank of England base rate announcement this Thursday. The markets are pricing in increases now and again, and they keep getting higher and higher, these predictions. Doesn't mean they'll happen, but that could mean we see more increases. Obviously, if you do lock in, then you'll miss out if the rates go up again. But potentially that 15k you could split into a 6-month fix, a 9-month fix, a 12-month fix, a 2-year fix, whatever it might be, and split it across different levels to kind of give you that chance. If things haven't changed in 6 months or 9 months, you can go in for a better rate. Or if you want easy access, put it all easy access. Barry says, hi Andy, I'm having some real problems transferring some of my previous year's cash ISAs to various new cash ISAs without contributing this year's allowance, which I don't want to do. So the way to transfer money from old ISAs is you would open up a new ISA, or potentially an existing one you've already got, and you would, rather than withdraw the money, I'm sure you know this already, but what you do is you click to transfer it, and the two ISA providers would talk about this. They would say, right, the new provider with a better rate would talk to the older one with a lower rate, and it would work it out. And it can take some time, but it would move that money across so you can earn that new rate. And potentially you can do this a few times in the year. Where there could be problems is if you've paid money into the ISA this year, then often to move that money, you have to close down the previous ISA itself as part of the transfer. They'll either let you transfer the old money or all the money. So if you're saying you're trying to move money to different ones, that could be a problem. Maybe you need to focus on transferring all of them into another either new ISA provider with that better rate. Hopefully that's helping you there. Beans Means Hine says, do you still recommend Nationwide's Flex account? So there are a number of different Flex accounts. The Flex Direct account is the one that I always say used to be my top account for a number of years, because it gave a high rate of interest and a decent amount of cash when nobody else did. Then that rate dropped, as all rates did, and I was saying probably best to stay clear of it in case rates improve. And then rates did improve, and they improved it to where it is right now. And it's been like this for a while. It's 5% for 1 year on $1,500. Now, for savings point of view, that can be beaten with a handful of different accounts. Barclays Blue Rewards, their linked account, if you get that and follow the criteria for the Blue Rewards, with 5.12% on 5k. So you're getting a slightly better rate or more money. Plus, you can get, it's just for 1 year and you only get that account once. You can't get it again. So my feeling is it's not a huge amount. If you have $1.5 grand to put in there and 5%, it's a decent amount. It's not to be sniffed at, but it's not so huge for most people. They can't go, right, I'm going to hold off. I'm going to go elsewhere, get something close to that, even a little bit less than that, get that money and wait before I apply for it. The only exception I would say here is if you are after that Flex Direct account because of the overdraft. It's the only one that gives a sizable 0% overdraft. Now that is, again, only for 1 year and you can only get it once. But if you have an overdraft that's costing you a lot of money, a lot of these are around 40%, then that might be a way for you to shift some of it across, avoid that massive amount of interest being charged every single month and clear it away. Get rid of it before that year is up so you don't suddenly get charged the same rate on that money. So from that point of view, then I certainly would consider looking at it. There is also a Flex Plus account. Again, talked about not doing a review on Crew, and I've been promising for ages that I'll also do a look at the different packaged accounts. That generally has been viewed as one of the better value for money packaged accounts when you've got your travel insurance and breakdown cover and things like that, obviously for a monthly fee. So that may be one to consider if you want those things, if they're good for you. Ultimately, Nationwide is a building society and as such is probably the more ethical of the large high street options out there from that point of view. So if you're worried about what your money is doing with the likes of Barclays or Santander or Chase or whatever it might be, putting it with a building society such as Nationwide is no bad thing. The app is improving as well. Still not as good as many of the others, but they are getting rid of the card reader, which was always my big bugbear with it. So I definitely wouldn't say avoid Nationwide, but I would say the Flex Direct account, only get it right now if you need the overdraft. Otherwise, wait and see if we do get a better offer for that rate or how much you can get at that rate. Ross says, do you think rates can really remain this high for the next 12 to 18 months? So I was looking at this today, and the predictions of where the base rate is going to go, not just this year, but going on, and it's really high. It's still looking at us being at 5% in 2 years' time. So, and we're not even at 5% now, are we? So looking at getting there and staying there. But then a month ago, it was nowhere near that. 6 months ago, they were nowhere near that. These predictions go up and down. So you can't say for certain. All you can say is right now, the markets and some economists will be saying this is where interest rates are going to go, base rate at least, and therefore savings and mortgage rates will be impacted off that. But you think about everything that's happened over the last 2-3 years, going back even further to Brexit and going back 15 years to the financial crash. Things happen all the time that can change this. So you've just got to make a decision that you're comfortable with based on the information you have at that time. And if you hold off and wait for rates to get higher and higher, and they don't and they drop, then you've missed out on rates. If you fix in now and they go even bigger, then you've got to be comfortable with the rate that you've locked it in at. The fact that rates are so good, 5.7% for a 1 year fix, I mean, that's really good. And again, you don't have to put all your money in it. If you're worried about it, put some of your money in to lock in that rate and then hold some back. Hopefully you'll get a better rate if it improves, but if they don't, put it at a lower rate, but you've got some of it in that higher rate, on savings at least. Okay, Stephen says, hi Andy, did you get anywhere with Ulster Bank? So finally, it's been a bit of a saga, as I'm sure it was for many of you. My switch is going to happen tomorrow. So the plan is, if I can, I'm going to write it up with a guide on how to do it and do a video for everybody else this week, if I can. It might fall into next week. The rumor that some of you might have saw that I shared in the Facebook community last week was that the NatWest, RBS and Ulster switches were due to finish on the 30th of June. That was actually published by a Snoop, and the email came through saying that. So I saw that and I couldn't find the information anyway. So I contacted NatWest press office. They said, no, there's no set end date for this. And then Snoop, a couple of days later, said, we were told this in writing, but apparently that's not the case. So what that suggests to me is that either someone jumped the gun and confirmed a date that was internally confirmed, but hadn't been finally signed off or something to Snoop, and they had to backtrack on it. And it is going to end on the 30th, all the switches, or it's not. It's really, I know it doesn't help much, but it's certainly worth considering if you haven't done some of them yet to have a look at it, which is why I'm a little bit dubious about do I do this review, the guide to the Ulster switch and the video, and just in time for it to finish. But I'll try and get it done before that because it might help some people in the short term at least. Right, let's head back to Insta. Sorry, guys. Sorry, James. I'm just doing one question per person right now, but you're welcome to ask it later on if we have the time. Okay, Shahad says, is Raisin safe and recommended? Reviews aren't great. So Raisin is a savings marketplace. So this is effectively, you go to Raisin, imagine it's a bit like, I don't know, it's a supermarket. You go to Raisin's, the supermarket, and then there's shelves, and the shelves are full of different savings account providers. Some of them you'll know and you can buy them direct from the brand elsewhere. Some of them are only going to be on Raisin, and some of them might have rates which are better on Raisin. They are going direct to the provider. And there are some, biggish names in there, Tandem's in there, Investex in there, a number of different ones as well. I've used them in the past. They used to have a welcome offer, which comes and goes. I might be able to sort of blag it for you guys again, but sometimes they had it as a refer a friend option as well. So when one of those came along a couple of years ago, I signed up for it and used it like that. The app was a bit basic. They've made a number of improvements there, but I had a fixed account, so it didn't really matter. The money was in there. It sat there for 6 months. I got my bonus, and then I withdrew it because I could get a better rate elsewhere. And it is absolutely fine, absolutely safe. Your money is protected under the Financial Services Compensation Scheme up to £85,000. So from that point of view, no problem at all with it. And if it's giving you the best rate, then yeah, absolutely give it a go. Where maybe, again, and to be fair, I haven't looked at the app in a while, if you're using it as an easy access account, and there are some okay rates there, not top of the table, but it doesn't mean there won't be top of the table in the future, and you want to get your money out more frequently, then it's maybe worth looking in a little bit more detail about how quick that's going to happen. But yeah, absolutely. I mean, I wouldn't have any problem using them if they are giving you the best rate, particularly money you're going to lock away for a number of years, because it will be absolutely safe. Chris says, given the impending interest rate rise, is now a good time to overpay a mortgage? So this is really interesting. Again, it's on the list of content. I want to do an update. I did a few years ago, or maybe even last year. I did savings versus overpaying your mortgage. And the basics in that are still true. So do watch that. But I'll do another update looking at where we are now. But the very fundamental you've got to remember here is it's not as simple as maths. You can simplify it to maths. You can basically go, right, if I can get more in interest than I'm paying on my mortgage, then it's better to put it in interest, in savings. But if my mortgage rate is higher than my savings rate, then it's better to put it into the mortgage on a purely maths basis. However, it's never quite as clear cut as that, because let's say you can get a better rate on savings than the mortgage, but paying off your mortgage, for a lot of people, myself included, putting extra money in there every month gives you greater peace of mind, and it kind of balances things out, particularly in case there are bigger rates later on down the line. Also, overpaying your mortgage can be a great way to increase your chance of getting on the next level of what's called loan to value. Again, I've got a whole video and article looking at LTV, loan to value. That's that kind of 90%, 80%, 70%, 60%. You can get better rates if you've got a lower LTV. So 60% loan to value means you are borrowing 60% of the property to 40% equity. And that's going to get you better rates than if you're borrowing 90%, you've got 10% equity. So then it might make sense to put more money over there just to get you below those tiers. But also, you might have a limit on your mortgage, how much you can overpay every single month, every year. It might be just 10% in total. You might not be able to do it, or there might be penalties. There might be penalties if you pay everything over a mortgage too soon, if it's a fix of some kind. So lots to consider there. So do check out the article and video that I produced before. They are still, the basics there are correct. It's just I'll be talking about different levels because the mortgage and interest rates were at different levels. And I do plan to do an update soon. So hopefully that helps you. JGW90 says, I would like to start saving. I have a Starling account. Is that the best account to start with? If you've never saved before, then the likes of Starling and Monzo and Chase, to an extent, are pretty good for this. And in fact, a number of the bigger banks have copied this as well, and they have similar features. Because you're Starling, you've got spaces. With Monzo, you've got pots. And it's a great way for you to kind of move your money across simply, set up some rules, or just do it manually, still in the same app, but it's separate. Always really important to keep your savings separate out of your main account, because you're less likely to spend it then. You have to actively go in and take that money and move it across if you want to access it. So from that point of view, they are great ways to start. Starling does not give a particularly good interest rate, right? So again, if you're just starting off for the first time, maybe don't worry about that. But if you're feeling confident that you can do this, then I would maybe look at instead moving your money separately to a different account which pays more money. And I have got some videos on the channel talking about how to start saving. So do check those ones out. Again, when you're looking for these things, go to the YouTube channel or the blog, find the little search icon and type in some of the things I've mentioned. And for this one, it's like, start saving or savings tips. And hopefully you'll be able to find that content that way. Sarah says, hello, Sarah. So, hi, Andy. I wanted to create a dummy account for switching banks to make money. But when you switch to cash in, doesn't that next account become the dummy account? Yeah, absolutely. So again, a lot of content about dummy current accounts. Do search for those on Google or on the blog or on YouTube channel. You have a dummy account, new one you set up, or an old one you've got purely for switching purposes. The next one you switch into, if you're just after the cash, you can then use that one again to switch to the next one and to the next one. Where you might not want to do that is if the one you switched into has some kind of feature that means you want to keep it. Maybe it's that 7% regular saver from First Direct. Maybe it's the free Disney Plus from Club Lloyd's. Maybe it's the £5 a month reward from Halifax Rewards. Those are reasons why you might not want to then use those as a dummy account. So you might need to set up another one later on from a different bank, or potentially an additional account with one of the banks you've already got in order to keep switching. Ravi says, hey Andy, with interest rates being so high, if we do exceed our personal savings allowance, do we have to do anything or will this be automatically deducted? This is for an employed person. So if you are going over your personal savings allowance and therefore you have to pay tax on interest above the PSA, if this is new to you, again, I have got content on tax on savings, so search for that, which will explain more. But that you will then be, at the end of the year, the tax HMRC will have a look at it and they'll take it at source out of your salary. So you won't have to do anything. You'll just earn less tax-free income from your job in the next following year. Okay, so it will work out like that. However, if you already fill in a self-assessment form for whatever reason, you could be self-employed, but you could also have some dividends or whatever it might be, then you have to put it through your self-assessment. How are we doing on time? Okay. Oh, God, it's past. Right, guys. I'm not going to get through the rest of these questions. I'm so sorry about that. So many of them there. Again, remember at the top, I told you about heading to the Facebook group, becleveryourcash.com/community. And that is the place to go. Apply to join. Might take me a day or two to approve you, or it might take me a few minutes. Who knows? Depends what's going on. But once you're there, you can ask a question. Again, I am approving everything, which does take a fair amount of time. So please do have a look, first of all, before you post the question, that someone hasn't already posted it and asked that question, or you can't find that information on the website or on the YouTube channel. Because if something comes up a lot, I generally just reject them, because otherwise it becomes a bit spammy. But that's a great place to ask those questions. And don't forget, every single Thursday, I do release a newsletter at 7 a.m. And this is free, won't cost you anything at all, but it's the best of everything I do. So sometimes, and there's some stuff that's happening tomorrow that I can't talk about now because it's under embargo, but they'll be published on the blog tomorrow, and along with the podcast that comes out tomorrow, but any other content I produce and some top deal picks Thursday morning in your inbox. Get that every single week. Often you'll just be on top of these things as they go along. becleveryourcash.com/newsletter is how you'll find it. There's also a £17 welcome bonus if you're new to Quidco and sign up via the newsletter and then spend some money on Quidco, which is a really nice sort of little extra as well. Guys, thank you so much for joining me again tonight. The next one of these will be in a couple of weeks. I will let you know in the YouTube group and the Facebook group on the newsletter when exactly that will be. All right, guys, thanks so much. See you again soon.